Hello everyone. I'm welcoming you to the very first session of our intraday trading program. This is the first pre-session. But I want you to take this very seriously and very important, because even though I'm offering the very first video as free, but this has something which is very important for our next sessions. So totally there will be 4 sessions. Okay, every session will be 30 to 40 minutes long, and the very last session will be almost 1 hour, and so that by the end of the 4 sessions you will be getting an idea of how to take a trade, how to put your stop losses, and how to analyze the chart, how to find out the potential target zones. Complete stuffs related to intraday you will be knowing by yourself. So after that I will be adding you to my personal broadcast, okay, so that you will be getting my support forever. It's not that after the training, it's after the videos and sessions it's over. It's not like that. It's after the sessions we will be having a small call, and we will be talking, and then I will be adding you to the broadcast, and you will be getting my messages forever. Okay, so that I will be there to help you out throughout the entire time that you're doing this. Okay, even though you become an expert, but still if you have any points, any doubts, I will be always there to answer you. So first of all, I want to talk about a few trading myths. Okay, first of all, trading is not a quick rich scheme. People who do or come to this business thinking that they can become rich overnight, they are going to lose everything overnight. Okay, so trading is not a quick rich scheme. Trading is a business, a wonderful business which has a great potential to give you consistent returns every single day, but provided you are treating it as a business and not as a quick rich scheme. So high accuracy. The problem with high accuracy, if you are there in stock market for some time, you will be getting calls from tip providers. Who are tip providers? Tip providers are people who will tell you what to buy and what to sell, but they will not tell you why they are buying and why they are selling. In fact, they don't buy and they don't sell. They are just going to give you calls. If you follow them, you are never going to make any money consistently in this market. So what they say is that they have a high accuracy, okay, but in reality trading does not or need not have a high accuracy to make money. Okay, accuracy is nothing in markets. You will understand why by the end of the session. No losses. Okay, so many times some people project their trading like there is no losses in intraday, but the thing is there are losses in intraday. If you just accept that reality, you will be doing well. But the thing is, when you're losing, you lose the predefined amount which is fixed by you, but when you make a reward, it should be huge. So the problem with many traders is that they are very, very fast in booking the profits, but they are very, very patient in booking the loss. But we have to be exactly opposite to that. We have to be very, very patient while booking the profits. So for that, we need to know where the stock is about to go. That is technical analysis. We will learn that. And we have to be very quick in cutting the losses when we know we made a mistake, or when we know our stop loss has been hit. So trading should never be done on a gambling mindset. So what is gambling mindset? When you take a trade, you just enter by someone else's tips, or because of a news you are entering, or because you are placing a high bet in expecting that you are going to have a move in your direction, taking a risk that is more than your risk that you should be taking. Every single thing is a gambling mindset. Doing overtrade just because you had a loss, recovering trades, praying for the market to go up, all these things are gambling. If you do with that mindset, you will never make money. So trading should be done with a business mindset, and we will be looking into that. So reasons why people fail. Even though intraday is so much awesome, even though intraday can give you huge returns. So like one of my students, he's doing with a capital of only 10,000 rupees, and he's consistently making every single day 1,000 rupees, which is very good because that is 10%. Okay, consistently. And there are people who make 40% also in a day. But the thing what I want to say is, it's not why people lose money in markets is because they are not analyzing by themselves, and they don't follow money management, and they don't have the right trading psychology. I would say 30% is analysis and 70% is money management and the trading psychology, which is the most important thing. Money management and trading psychology. Once you understand that, you can understand, you will do well in your trading, and you will understand technical analysis very well. So what is money management? Your capital preservation. Just remember this, just think about this. You are here in this trading market just because you have some capital with you. You are there only because of your capital, be it 5,000, be it 5 lakhs, be it 50,000. I started my trading with 50,000. Okay, and right now I'm trading with 5 lakhs. Okay, I was working in a company called NASDAQ in India. NASDAQ is the stock exchange of United States. So I was working in a NASDAQ in India, and from there on I was fully trading, and I quit my job. And because I was able to make this as my full-time job. Okay, so you can definitely make this as a full-time, but once you reach the level that you are able to trade on your own, I would suggest you to quit the job. But before that, I would not recommend to quit your job or anything like that, but you can keep that as your long-term goal. So you have to remember one thing: you are here because of your capital. Okay, nothing else. You are not here because you know technical analysis. Even though people who know technical analysis may not able to trade because they don't have a capital. You are here because of your capital. The moment you lose your capital, you are out of this market. So treat it with such respect, treat it with so much importance, and protect it. Make every steps to protect your capital. If you survive without losing your capital, it means you are making money. So we will talk about that. Per trade percentage. So in a trade, I take only 1% risk of my capital. What is 1% of my capital? 5,000 rupees. I'm trading with 5 lakhs, so my 1% risk is 5,000. So I'm comfortable of losing only 5,000 rupees in the trade. Therefore I don't increase my capital. Whatever profits I make, I consistently invest it on a long-term basis. Okay, I don't do short-term, medium-term kind of stuff. I do intraday, and I take some profits and I invest it for long-term. You know, every day, if you really value this, if every single day you can buy a share of any company you want, right? Investing will make you create you wealth. Okay, intraday will give you the income, but it's not going to create wealth. Once you put that income into investments, only then it will become wealth. It will create you wealth. So per trade percentage is I take 1%. I'm not telling that it's a general rule that you should keep only 1%, but it's very good that if you take only 1% trade in a 1% risk in a trade. So for me it is 5,000 rupees. If you're trading with a capital of 50,000, it's 500 rupees. Whatever capital you take, you have to make sure, first of all, the very first important thing in trading is, what is the amount that I will lose if this trade fails? So it's not thinking negatively, but it's the reality. We have to fix the loss, then we are very good to go. So now, very important thing, risk reward. So if I'm taking a 5,000 rupees risk, I recommend to get more than 1:2. So if I'm taking 5,000, 1:2 is what I recommend. 10,000 rupees. So anything more than 1:2 is awesome. which we will learn. But anything less than 1:1 is a failure. So many times people take a 3,000 rupees risk, for example, and they exit at 2,000 rupees profit. That is not at all a good thing to do, because just imagine I'm telling you I'm going to give you 5,000 rupees, you give me only 3,000 rupees. Why are you taking that trade? You can keep that money with yourself. Never take a trade which is not even going to give you 1:1. So risk reward is very important. Many people talk about only accuracy. I'm having 90% accuracy and still they don't make money. The reason, accuracy is not important, but accuracy plus risk reward is the most important thing in technical analysis. So accuracy, even with the 50% accuracy, you can make lots of money, which we will learn. So see here, you have a 50% accuracy, and just imagine your capital is 1 lakh. Like it can be anything, okay? It can be even 10,000, it can be 5,000 in the beginning start. Let's imagine your capital is 1 lakh. You're just taking a risk reward of 1:2. I mean, I told you we have trades where we take 1:8, 1:9 based on that trade, so that I don't put a specific target. I trial the stop loss and go behind it, which we will learn. But just imagine you have a very bad accuracy of 50% and capital is 1 lakh, and your risk to reward. Risk is 1,000 rupees and reward, if you are correct, if you are good, if you made it well, then it is 2,000 rupees. So you had 50 winners out of 100 trades. 50% accuracy, so out of 100 trades you had 50 winners. You made a lakh rupee, 1 lakh rupee, and you had 50 losers. You lost 50,000 rupee. So even with the bad accuracy of 50%, which means out of 100 trades you are wrong 50 times, and you made a net profit of 50,000. That is 50% return in a 100 trade. So in intraday you can even do 3 trades per day. Just imagine you can make 100 trades in a month very easily. So it's 50% return in a month, which is very awesome. Banks give 4% a year. Okay, this I'm talking about a very bad accuracy. Thankfully we are able to have a system which is having an accuracy of more than 80%, 78 to 80%. So just imagine how much you can make if you have a good risk reward, 1:5, 1:7 in some trades. And I'm not saying every trade you will make 1:10, 1:11 like that, but just imagine if you can make consistently more than what you are actually booking right now. Just it would be huge. You can make a very good return. So quantity determination. Just imagine a small example. SBI buy at 300 rupees, stop loss 298, target 305. So I don't put targets. I will tell you, this is just for example. So how do you decide your quantity? Quantity is given by the formula risk, which is the amount that you're willing to lose peacefully. So for me it is 5,000. Let's imagine with a risk of 1,000 rupee. So risk divided by entry price, which is 300. And stop loss, which is the price that you will exit if the trade does not work in your favor. That is 298 rupees. So quantity is equal to 1,000 divided by 300 minus 298. 1,000 is the risk, entry price is 300, minus stop loss is 298. So quantity is equal to 1,000 divided by 2. For this particular trade, you will buy 500 shares. Right? So no matter what happens, your risk will not exceed 1,000 rupee. But when it comes to the reward, it could be anything up to the markets. So every single parameter in this expression you should be able to determine. So first of all, how do I select the stock? So we will learn how do we select the stock. Then which direction should I go? Should I go to buy or should I go to sell? Should I go long on the market? Should I go short on the market? We will learn. At what price should I enter? That is 300 is the buy price, and stop loss is the price that you will exit if the trade does not work in your favor. Target is the potential area that you will book the profits. So the psychology of trading is that you should be having a casino mindset. What is casino mindset? You know, many people go to casinos. Okay, but ultimately if you see the past records, no one who goes to casino will be consistently making money. They will be always losing their money in the end. Maybe they will be having continuous 5 innings, they will be having continuous 6 innings, but ultimately the casino is the one who will be making money. Why? Because they have the edge. they know that in a series of plays, they will be the one who is winning. So all you need is edge in the market. What is edge? Edge means accuracy plus the risk reward. Okay, so they have an accuracy, they have an expected accuracy, and they know that over a large number of games or a large number of plays, they will be the one who is winning in casinos. People who play may win once, twice, third, ultimately they will be the one losing. So I'm just going to give you a coin, and I'm saying if you flip this coin, you're going to get heads 70 times. Okay, this coin is designed in a way, okay, the plays or in casinos and everything are designed in a way that if you flip this coin 100 times, you are going to get heads 70 times. That's all you need to know, which means 30 times you are going to fail, absolutely fail. So you don't know which 30 are going to be failures. You don't know that. You don't have to know that, because all you know, I know that 70 times I'm going to get heads, I'm going to win, and I know that whenever I'm winning, I'm going to make it larger risk rewards when you compare that coin example with trading. And whenever I lose, I'm going to be losing only the predefined amount. So trading can be perfected, trading can be analyzed only on the law of large number, that is on a large number of trades and not on a trade by trade basis. The outcome of every single trade is totally random, totally not in your hands. Okay, even though you learn technical analysis and every single stuff, the outcome is purely random and totally uncertain. So you can analyze your return and analyze your reward only on a large number of trades, which means on 100 trades, let's say, okay, on a sample size of 100 trades. Now just imagine, if you know this, you will never be emotionally attached to a single trade. You are not going to be worried on a single trade. Whatever the outcome is, I'm going to move to the next trade. Whatever the outcome is, I'm going to move to the next trade. You are not so much happy when you make a lot of money. You are not sad when you lose the predefined amount. So you have to remember, why does a price, for example, you buy at 700 rupees, and why does the price actually go to 701, right? So I will show you something. So when you buy at 700 rupees, why are you buying that, and what are you really expecting that? So for example, you are buying at 700 rupees. When you are buying, even though you may not say it, but what you are really expecting is someone from anywhere in this world would come and place a bid higher than the market price, right? So it's a new outcome. What is technical analysis? Technical analysis is based on the previous price patterns. Technical analysis is going to give you a high probable setup, which means what you are expecting to happen is more likely to happen in such a condition given by technical analysis. It's highly probable, okay, of one thing happening over the other, but it does not say that 100% it has to be going as per your wish. It can be going to as per your wish based on technical analysis, or it can go up. So whatever happens, we will lose little, and when you make a reward, you have to make it to the large. So this is just a simple example of just showing you based how price patterns are going to work, but we will not trade because of this. Our primary goal in technical analysis is to learn to identify the trend. So trend analysis is the most important thing. That is the only, I would say, I personally say, if you are sticking with the trend, then that is the most easiest and wonderful way to consistently make money, because trend is your friend. There is no point of staying against the trend. We are not strong for that. Okay, so your prices are moving because of bids and orders. Okay, it's a totally new outcome. So technical analysis is going to give you a high probable setup so that you will be taking your trades, every single trade, with a predefined amount and with a larger reward expectation. Low risk, high reward expectation is the most wonderful successful way of making money in this market. There is no point of taking 1,000 rupees risk and exiting at 700-800 rupees. Okay, so now what I was telling is, just a second, yeah, so areas of focus. So what are we going to focus? First of all, we will learn how do we select the stock. So, okay, we know how we have to select the stock. We have to, every stock you can analyze, almost more than 5,000, 10,000 stocks you can analyze, but that does not mean that every stock is tradable. Alright, someone is asking what's the view of SBI today. You can definitely tell what's the view of SBI, but that does not mean that you will be trading in SBI today. Okay, there are stocks, there are particular movements which are good, which are suitable for intraday. Okay, so we will be trading only on those market zones. We will be learning the potential zones of the market. Okay, we will be learning what is the probable high potential long location, what is the probable high probable short location, the conditions of the market, and we will learn about the overbought oversold market. We will learn about the triggers of the market. We will learn how to find out a good entry, stop loss, targets. The most important thing, how do we manage every trade for maximum reward. So we will be learning every single thing in this, and I hope you got an idea of what we are going to learn, and I hope this session was useful for you. So as I told you, there are 3 more sessions which are the most important session. We will be starting the technical analysis in that session, and like every session, once you complete, I will be there to answer your queries and help you out with every session. So it's not like just you're watching and you're like going, but you have to take every session very seriously, have a business mindset, and you're going to do well in this market. Okay, so thank you so much for watching it. We'll see in the next session.